Hey guys, welcome back to another training video. I am Kenya, owner and educator with BK Forex Academy, and today we're talking about one of my favorite topics, risk management. And I'm going to talk to you about how to use limit orders to control your risk. So if you are not doing so well with risk management, just follow along, look at all of our videos on risk management, and I promise it is going to help you so much. Risk management totally took my trading to a whole nother level, and ever since I mastered it, I have just been an awesome, consistently profitable trader, and you will too within time. So order types, that is what we're talking about today. Understanding the differences between order types and how they can help you will help you determine which best suits your needs, and it also helps you to minimize your drawdown. So when I say drawdown, that is referring to the amount that you might be negative on a trade. So there's a few different order types that you want to be familiar with. Number one is a market order. So when you are trading, there is an order type called a market order, and a market order is the most basic order type. And the purpose of it is to help you execute at the best available price at the time the order is received. So it's pretty much just telling your broker, hey, get me into this trade at the best available price, and you're willing to see what price you get into. You're trying to get into that trade immediately. So let me show you a quick example of a market order type, and then we'll discuss two other order types that are really, really important. Currently, you can see my MetaTrader 4, and I have an account here for $3,000. So I'm going to click on the plus sign. I'm on an Apple mobile phone, so I'm going to click on the plus sign. And if I want to get into a trade immediately at the best available price, I'm simply going to click Market Execution. So I just tapped on Market Execution, and you can see that I have two options at the bottom, and it says Sell by Market or Buy by Market. So if I believe that the market is going to go down and I want to get into the trade right away, I can go ahead and hit Sell by Market, and it will get me into the trade immediately. Now, one thing to note is that normally when you get into a trade with an execution order, for market execution order, your trade is most likely going to start out being negative. So you're always starting out in the negative because your broker has to find a buyer for every seller. So they're trying to get you in at the best available price. Remember, market orders get you into the trade right away. Now, let's say if we go to a chart and we believe that the market is going to keep going up and we want to get in at a better price. Then we want to switch our game plan and we want to use limit orders. So let's go ahead and talk about that. So now you're looking at USD JPY. I'm on the weekly time frame, and you can see that we have this impulsive move currently happening to the upside. So let's say, for example, if I sold right here at this zone, 111.60 zone, and let's say I believe that the market was going to come here and sell off. And let's say that I entered through a market execution order, just like you saw me do in my MetaTrader 4, right? Well, let's say the market continued to go up, so the price kept going up, and now I'm about 45 pips negative, okay? So I'm negative, and I am trying to decide how can I still come out profitable with this trade. Let's say if I still have room in my account, I'm only risking 2% of my total account balance, and I want to enter another trade. Well, instead of just doing market execution orders, right, I want to plan strategically. So the nice thing about a limit order is that it allows you to buy or sell at a specified price or better. So for example, now that this market has pushed higher, let's say if I believe that I would have a nice strategic advantage if I entered at around 112.02. Well, now I can go to my MetaTrader 4 or 5, and I can enter a limit order to sell. I can even enter it at, if I believe that the market is going to go and retest this wick area here at 112.15 or so, I can enter a sell limit order to get in at the best possible price. So I'm basically wanting the market to go to a specified price, get me into the market, and then I want to see the price go down in the direction that I would like it to go in. So let me show you how I would place that sell limit order. I'm going to put a limit order at 112.02, or maybe I'll do 0.01 so that you can see it activate hopefully, and then we'll come back to the chart and wrap it up. So you'll see here that with USD JPY, I have two sell limit orders that are set, right? And it's at 112.02. I'm going to go ahead and click on the plus sign, and I'm going to click on market execution, and I'm going to click Sell Limit. Here is where I can change my lot size, which is the position that I want to trade. I'm going to keep it at 10 cents a pip, which is 0.01. For the price, I'm going to enter I'll do 112.00, 112.00, and I'm just going to click place. And basically what I'm doing is telling my broker to get me into the market at 112.00. So when the market gets to that price, it's then going to get me into the trade. So by using limit orders, this is how you can avoid having too much drawdown on your account, because you're waiting patiently for the price to get to a specified area that you want to buy and sell from. Now you can see the numbers are fluctuating to the right. So this just means that your order is pending. Your order has not yet activated. You can see the trade at the top that's in profit right now. That trade is in profit. That's the one that I executed with a market execution order. It got me into the trade right away. One thing you want to keep in mind is that limit orders do not guarantee that you will enter into or exit a position, because if the specified price is not met, your order will not be executed. So you're going to see these numbers run. So that's one thing for new traders they don't understand. They'll say, well, my trade didn't activate. I don't understand what's going on. Why is it not getting me into the trade? So it means that the price never came up to the actual price where you wanted it to get you in at, which is 112.00. It hasn't yet reached that target. So until then, these numbers are going to keep going. And if this market drops and I miss out on the trade, then that's just a conclusion of what could happen. Okay, so that's something that you definitely want to keep in mind. Now, question to you, have you ever got into a trade, for example, at a particular zone, and you thought the price was going to go up, but it kept declining and going down? And then you're like, okay, I know it's going to turn around. I know it's going to turn around. And you enter another position and another position and another position and another position. And before you know it, you are over leveraging your account. And then you're like, oh Lord, please turn this market around. I promise I won't do it again. Please save me from this trade. I was that person early in my career, and I know that I'm talking to the crowd out there. So in order to avoid that, you really have to get a buckle on risk management and really take some time and master it. If you're losing trades, stop trading in your trading account. Make sure you get properly educated. This is something that we highly teach in our academy, and it's one of my #1 priorities that I love to practice with students, as well as my husband. We really take risk management very seriously, and honestly, it is the one thing that will change your trading, so you have to master it. But just giving you an example here of Euro USD, you know, I know a lot of traders right now. Today is we're in like September 29th of 2021. And looking at this chart, a lot of traders went long from this level here on this, looking at this weekly. And you can see this massive bearish candle here. And now it's retesting a previous weekly level from back in 2020. All right. So again, let's say if you had bought at this level, but I sat on the sidelines and said, you know what? I know a lot of people are going to go long. I'm more interested in this technical level here, right at, let's say 1596 or so. I'm going to wait for price to get there. So you can instead set a buy limit order at the best possible price, because you believe, based on what you're seeing and this strong demand level, that bullish pressure is going to come in. So this is how market orders can help you, because #1, they can limit your drawdown and the amount of it can limit your drawdown in your account, and you won't be as negative for a long period of time and freaking out about which way the price is moving. And it also allows you to get in the market at the best available price if you can remain patient. So that is something you want to really implement into your trading and get in the practice of using market orders. What I recommend is that you get used to using different types of orders, knowing how to feel comfortable with placing a market execution order, doing a sell limit order, a buy limit order. Practice placing orders at different zones of interest that you're interested in trading from, and train yourself to be patient and let price come to you. So guys, this is one way to improve your risk management method. Remember, this is a process. This is not an overnight thing that happens. So allow yourself to be new, to be a student, and to learn and enjoy the process. And I promise you, your journey will get better. I hope that you enjoyed this video. Give it a thumbs up, show me some love, and smash that like button. Make sure you subscribe and turn on notifications. And I will look forward to seeing you guys in the next training video. Thanks for watching.